Will Bitcoin hit $100,000? Can the Fed prevent an economic meltdown? Stay tuned as we break down today's top financial expert opinions on Bitcoin's explosive potential, the yen's collapse, and more. These insights might just save your investments. Let's dive into these crucial updates quickly so you can stay ahead.
Welcome back, everyone. Today we're highlighting some seriously pressing videos. But first, remember to like and subscribe for more time-saving financial summaries. Now, let's get into it.
Dan Weiskopf sees Bitcoin soaring to $100,000 thanks to ETF flows. Jeff Snyder warns of desperate measures by Japan to save the collapsing yen. Neil Howe discusses America's turbulent fourth turning. Peter Boockvar predicts cautious Federal Reserve rate cuts ahead. Sven Henrich talks about the small caps rotation amid volatile markets. Jason Shapiro exposes how big tech innovation benefits the few. Michael Silva provides live trading insights on market reactions to key events. Bob Elliott differentiates credit-driven versus income-driven economic expansions. Welcome to Eurodollar University. Today we delve into the chaos causing fits in Japan's financial corridors as the yen keeps hitting new lows. Jeff Snyder is here to shed light on why the Japanese government's interventions seem to be as useful as a chocolate teapot.
That's right. Buckle up, because we're about to dissect why the Japanese Finance Ministry's billion-dollar band-aids are failing and how it's all part of a bigger, scarier global picture.
So what's the big idea here? Why is Japan's government playing a losing game with the yen?
In a nutshell, Jeff points out that despite massive financial interventions, the yen keeps sinking. These efforts highlight deeper issues. It's not just about Japan or interest rates, but a looming global economic crisis.
Let's dive into the specifics. How ineffective have these interventions been?
Well, the Japanese government has thrown over $20 billion at the yen in recent efforts. Before that, it was $60 billion. Despite these colossal sums, the yen only stabilizes briefly, then continues its downward spiral.
And what's this about interest rates being a red herring?
Exactly. Jeff busts the myth that it's all about interest rates. Historical data shows little correlation between these rates and the yen's value. It's more about broader global economic issues linking to countries like China and Korea.
So, the yen's troubles are a symptom of a bigger ailment.
Yes, these issues reflect broader economic weaknesses in Asia and possibly signal a global downturn. Weak exports and financial instability are flashing red lights for the global economy.
Why then, if these interventions are so ineffective, do governments keep at it?
It's all about the show. Governments use these interventions to project power and inspire confidence, despite knowing they're outgunned by a complex global financial system. Think of it as a magician's act. It's all smoke and mirrors.
All right, let's gaze into the crystal ball. What future does Jeff foresee?
Jeff predicts a spreading recession starting from Asia and rolling into Europe and the US. The yen's plunge is an early warning sign of this broader economic distress. It's like we're seeing the economic dominoes line up for a big fall.
So how does Jeff suggest we navigate this financial labyrinth?
He emphasizes the need for honesty about the limits of central banks' powers. The current situation calls for more transparent global financial policies. Recognizing the real issues is the first step in avoiding a full-blown economic fiasco.
Welcome to another episode of The David Lynn Show. Today, we're diving into Bitcoin with an industry heavyweight, Dan Weiskopf, also known as the ETF professor. Got your coffee ready? This chat's going to be as stimulating as a double shot of espresso.
Absolutely. Dan's got some bold predictions for Bitcoin, hinting it could hit $100,000. Plus, we'll unpack what ETF flows mean for Bitcoin's future. Buckle up, everyone.
Let's get right into it. What's Dan's big thesis on Bitcoin?
Dan believes Bitcoin is on its way to $100,000. He highlights that strong ETF flows and rising institutional interest are key drivers behind this optimistic outlook.
All right, let's talk key points. What's up first?
First up, ETF flows. Dan points out that these inflows are crucial for stabilizing and boosting Bitcoin prices. He expects more ETFs, particularly spot Bitcoin ETFs, to be approved soon, which will drive prices even higher.
Institutional demand sounds like the new craze. Who's jumping on this bandwagon?
Indeed. Weiskopf observes that family offices, endowments, even pensions are stepping into the Bitcoin market. Financial advisors are also warming up to Bitcoin, potentially increasing mainstream adoption.
What's the dance between supply and demand in Bitcoin looking like?
Higher Bitcoin prices bring more supply, but robust institutional demand keeps things balanced. Importantly, Dan also warns that while Bitcoin could correct by 50 to 70%, it doesn't taint the long-term growth outlook.
Okay, we've also got the naysayers like Peter Schiff. What's Dan's take on their criticism?
Schiff and others might call it smart money, selling to dumb money in ETFs. Dan dismisses this as just entertainment. He argues that institutional investors are making calculated entries into Bitcoin.
So what crystal ball predictions is Dan making?
Dan's main prediction is that strong ETF flows and institutional adoption will propel Bitcoin to $100,000.
More ETFs on the horizon?
Yep, he's banking on additional Bitcoin ETFs being approved by more platforms in the fourth quarter, giving Bitcoin prices another nudge upwards.
Does Dan see any parallels with other markets?
Definitely. Dan draws comparisons to gold, noting that increased transaction volumes and tech advancements will likewise lift Bitcoin. It's a bit of the Internet of Money vibe.
Time to wrap things up. What's the final word from Dan?
Dan leaves us with an optimistic note, urging strategic caution. Despite potential corrections, he believes strong ETF flows and increasing institutional involvement will drive Bitcoin toward that $100,000 mark. The road is paved with demand and strategic moves.
Welcome to the Julia LaRoche Show on YouTube. Today's riveting episode dives into the crisis du jour. Are we in the midst of America's fourth turning? Julia's guest is none other than Neil Howe, historian, demographer, and author of The Fourth Turning is Here. Buckle up, folks. This could get bumpy.
Absolutely. Neil's deep dive into the cyclic nature of history is as enlightening as it is unsettling. From the assassination attempt on Trump to geopolitical shifts, it's all interconnected in this grand narrative he's been mapping out for years.
All right, let's get straight to it. What's the big takeaway from Neil Howe's insights?
Neil's main point is that we're in a fourth turning, a period of crisis that historically happens once every 80 to 90 years. This era is characterized by significant upheaval and societal transformation. Think of it as history's way of hitting the reset button.
Fascinating. So what are the key events or trends that Neil highlights as indicators of this fourth turning?
First up, the attempted assassination of former President Trump. Neil sees this as a symptom of the intense polarization we're experiencing. He also points to the erosion of trust in institutions, driving people to rely more on their tribes or localized community groups.
Yikes, definitely sounds tense. What other societal trends did Neil discuss?
He highlights the extreme political divisions, red states versus blue states, and how this tribalism mirrors the divided America of the 1850s. Essentially, America is self-sorting into factions, and trust in national institutions is at a dismal low.
And how does Neil see these trends evolving?
Neil mentions two potential outcomes. Either one faction wins and imposes its vision, or an external threat forces the factions to unite. Whichever path it takes, he stresses that the crisis period will radically transform society.
It's prediction time. What does Neil foresee on the horizon?
Get ready for economic turbulence. Neil predicts financial instability and inflation, describing them as public burden-sharing mechanisms. Essentially, society will have to find ways to redistribute resources during these tough times.
What about the global stage?
Globally, we're seeing similar patterns. Countries around the world are also undergoing their own versions of fourth turnings, marked by rising authoritarianism and geopolitical realignment. It's a worldwide wave of change.
All right, let's wrap this up. What should we take away from Neil's analysis?
Neil emphasizes strategic caution and building strong community and family ties. While this fourth turning is bound to be rough, he believes that eventually society will emerge stronger and more unified. It's like a storm that clears the air and makes way for new growth.
Welcome back to Blockworks Macro. Today's episode is a must-watch as market veteran Peter Boockvar lays it all out. We're in for a mix of economic turbulence with a side of inflation volatility. Excited yet?
Absolutely. Peter's been around the block a few times, and his insights are like gold, no pun intended, given his bullish stance on commodities. Let's dive into his take on what's keeping the Fed and all of us sleepless at night.
All right, give us the core thesis. What's Peter Boockvar's big warning?
Peter warns of a death by 1,000 cuts due to rapidly rising interest rates. He argues that the economy is on shaky ground, leaning towards a recession. He expects the Fed to cut rates by September, but emphasizes that inflation volatility isn't going away anytime soon.
Let's break down some key points. What's happening with the economic landscape?
It's like a tale of two economies. Low and middle income consumers are already in a recession, with manufacturing and housing sectors struggling. Meanwhile, higher income consumers keep industries like travel and hospitality afloat.
That disparity is pretty wild. What about inflation and the Fed's game plan?
Boockvar believes inflation volatility will persist. While the Fed may cut rates in September and December, these cuts will be cautious. Don't expect the magic of inflation dropping to 2% and staying there.
Interesting. I heard shipping costs are going through the roof. How does this fit in?
You bet. Shipping costs skyrocketed from $1,700 to $8,000. Someone's got to eat those costs, reflecting that the inflation fight is far from over.
Let's talk earnings. Are businesses holding up?
Depends where you look. Helen of Troy and Pepsi mentioned more discerning consumers hurting their bottom line, but companies like Delta report record travel demand. It's a mixed bag.
And what about retail? How are they riding this economic seesaw?
High-end spending like travel and concerts is robust, but lower-income targeted essentials are flagging. Starbucks and McDonald's are dropping prices to pull in traffic. It's a bizarre dynamic.
All right, time to gaze into Peter's crystal ball. What's he predicting?
First off, he foresees a weakening labor market tipping us into a recession. Higher-income consumers and government spending are holding the economy up, but this can't last indefinitely.
And for the stock market, any surprises there?
Expect a correction, especially in tech stocks riding the AI hype wave. Companies like Nvidia might face a reality check once investors demand actual earnings growth instead of dreams.
Let's wrap this up. What's Peter's final takeaway?
Peter believes the economy is on thin ice with persistent inflation and looming recession threats. He advises cautious optimism and diversification. Think commodities, precious metals, and stocks tied to the growing middle class in Asia to navigate these stormy seas.
Welcome to NorthmanTrader's NorthCast series. Today, Sven Henrich dives into the great rotation in the markets and what recent events might mean for your investments.
Absolutely, we're talking about some heavy-hitting topics like small-cap stocks, recent economic data, and even a dramatic political event. It's all about connecting the dots, so let's jump right in.
First off, what's the main thesis of Sven's latest update?
The core idea is the Great Rotation, focusing on how recent market dynamics are shifting investments, particularly into small-cap stocks. Plus, there's a consideration of how a major political incident could ripple into market behaviors.
All right, let's break down the key points. How did Sven address that political drama?
Sven touched on the attempted assassination of Donald Trump, drawing a parallel to the 1981 attempt on Ronald Reagan's life. He noted that while such events can stir market reactions, the overall market seemed to take this one in stride.
Interesting. Moving on, what market trends and indicators did he highlight?
He zeroed in on support and resistance levels, especially the breakout in the equal weight index. Plus, he pointed out oversold conditions in indices like the NYA, which saw a notable rise recently.
And how about economic data and the Fed's role?
Sven discussed how recent CPI reports and Fed statements are shaping market expectations. The Fed is wary of a weakening labor market and might cut rates sooner to avoid being too late.
So what about this rotation into small-cap stocks?
That's big. He noted that small-cap stocks surged last week, confirming his earlier predictions. Sven believes this could continue, supported by technical patterns like the cup and handle.
Time to gaze into the crystal ball. What predictions did Sven make?
He expects market fluctuations and possible corrections due to overbought conditions. He's watching for a pullback in late July and a potential rally in August, especially around the Fed's Jackson Hole meeting.
And any specific forecasts for small-cap stocks?
Yep. He anticipates more gains in small-cap stocks as long as the rotation trend stays strong. They're on a roll.
Wrapping it up, what are the key takeaways from Sven's market update?
Sven emphasizes the need for vigilance and caution. With markets facing resistance and possible corrections, it's crucial to stay informed and watch out for volatility. His advice? Keep a close eye on economic data and Fed actions.
Welcome to the Crowded Market Report on YouTube. Hold on to your hats because today we're diving into the fascinating world of big tech and AI.
That's right. Jason Shapiro gets to the heart of a burning question. Why does it seem like tech innovations are enriching only a few, while the rest of us are left wondering what happened? Jason is an experienced market analyst and trader who isn't afraid to challenge popular opinions.
All right, so what's the gist of Jason Shapiro's argument?
Jason presents a compelling argument that significant technological advancements, like AI, tend to benefit a select few rather than the broader populace. His core thesis is that being informed about both sides of an argument is crucial for successful trading, especially with the rapid developments and high stakes involved in AI investments.
Let's break down some key points. First up, why is diverse research important according to Jason?
Jason emphasizes the need for traders to seek out opinions that contradict their own to avoid confirmation bias. Focusing solely on opinions that align with yours can lead to poor trading decisions and losses.
And what about the great AI debate?
The big debate. AI could either be the biggest productivity boom in history or a massively overhyped bubble. Critics argue that the expense of AI investments far exceeds potential profits. Jason highlights the value of Ray Kurzweil's book, The Singularity is Near, which has influenced AI developers, including Google, and provides historical context on AI's potential.
Interesting. How does he tie this back to historical context?
Past technological advancements faced similar skepticism and fear, like with electricity and airplanes. Big tech changes initially seem overwhelming and scary, but can eventually lead to widespread acceptance and transformation.
And those AI benefits seem pretty concentrated, don't they?
Absolutely. Major technological shifts often benefit a small group of early adopters and innovators. Those who doubt or fear these changes might miss out on significant opportunities.
So what are Jason's crystal ball predictions for AI's impact?
Jason suggests that the ultimate impact of AI is uncertain. It could bring massive changes to productivity and economic structures, but it's also possible that the hype won't translate into long-term profits for most companies.
To wrap things up, what should we take away from Jason's insights?
Jason underscores the importance of balanced research and paying close attention to market trends. He stresses that, regardless of one's personal views on AI, it's essential to consider expert analyses and historical precedents while remaining adaptive to market signals. His call to action is clear. Don't let biases dictate your decisions. Instead, trust the tape and stay informed from all angles.
Welcome to Figuring Out Money. Today, we're diving into a live trading session packed with insights on how Trump's latest antics and Jerome Powell's remarks are sending shockwaves through the markets. As always, we've got the savvy Michael Silva to guide us through the chaos.
Absolutely. Michael breaks down the market reactions to these big headlines and shows us real-time trading strategies. It's a masterclass in keeping your cool and making smart moves in a volatile market. Let's get started.
So what's the big idea behind today's trading session?
The main thesis is all about how major news events and key figures like Trump and Jerome Powell influence market movements. Michael focuses on real-time trading strategies to navigate unexpected turns and maximize gains.
Let's get into the specifics. How's Trump stirring the pot this time?
Michael discusses Trump's latest tweets and public statements that caused immediate market reactions. He points out several instances where the stock and crypto markets dipped right after Trump's comments, showing just how pivotal staying updated can be.
Sounds like a Twitter storm in the financial world. What about Jerome Powell's latest remarks?
Indeed. Michael dives into Powell's recent statements regarding interest rates and inflation. He shows how these pronouncements directly influence trading strategies, driving home the point that monetary policy is a big deal for market movements.
Now onto the nuts and bolts, stock market strategies. What did Michael share?
Michael demonstrated some practical stock trading strategies suited for today's volatility. He emphasized technical analysis and provided tips on spotting entry and exit points to make the most out of market swings. It's like getting a financial toolkit.
All right, and the wild world of crypto. What's the latest there?
Michael gave an in-depth look at the recent behaviors of major cryptocurrencies like Bitcoin and Ethereum. He tied these to broader market signals, regulatory updates, and technological developments, offering a well-rounded perspective on what's driving the crypto market.
Let's peer into the future. What are Michael's predictions?
Michael forecasts ongoing volatility fueled by political and economic news. He suggests traders be ready for sudden shifts and flexible in their strategies. He also points out that certain sectors like tech and green energy might have a bright future despite the turbulence.
So, what's the final takeaway from this session?
Michael emphasizes the need for traders to stay informed and adaptable. He underscores the importance of using both fundamental and technical analysis to navigate through uncertain markets. His call to action: be prepared and stay nimble to seize opportunities as they arise.
Welcome to the Bob Elliott channel on YouTube. Today, we're unraveling the intricate world of economic expansions. Ready for a brain workout?
Oh, you bet. Bob Elliott is our guide through this economic maze. He's breaking down the big difference between credit-driven and income-driven expansions.
That's right. And if you've ever wondered why some economic booms go bust, this is the video for you. All right, let's drill down into the meat of this. What's Bob's main argument here?
The core idea is comparing credit-driven and income-driven expansions. Bob highlights how borrowing fuels credit-driven expansions, but warns this method has its limits. Income-driven expansions, however, rely on real economic activity and are more sustainable.
Got it. So what are the key points for each type? Let's start with credit-driven expansions.
In credit-driven expansions, people or businesses borrow money to boost spending and investment. A classic example is the housing bubble, where huge amounts of borrowing led to a spike in home purchases.
Sounds risky. What's the catch?
Exactly. The problem is there's only so much credit to go around. Once everyone's borrowed all they can, the cycle collapses, especially when interest rates go up, leading to downturns.
And how about income-driven expansions?
For income-driven expansions, think of simple trades. If you paint my house for $100 and I mow your lawn for the same, we both benefit without taking on debt. These activities can sustainably fuel growth over the long term.
Nice. And historically, how did these cycles play out?
In the 1950s and 1960s, economic growth was mainly income-driven, but supported by manageable credit. Lower interest rates led to loans for cars and other purchases, sparking economic activity. It's a healthier mix compared to pure credit-driven booms.
So, what are the future implications?
Bob predicts that while credit can provide short-term boosts, sustainable economic policies must focus on income-driven growth. It's all about finding a balance that supports long-term stability.
Wrapping it up, what's the final takeaway?
Bob urges us to understand these two types of expansions. He recommends policies that carefully blend both to avoid pitfalls of heavy borrowing and ensure solid, continuous growth. It's like building an economic fortress with strong, sustainable foundations.
Jeff Snyder highlights Japan's futility in controlling the yen, suggesting it's a prelude to global economic troubles. Dan Weiskopf paints a hopeful picture for Bitcoin, reaching $100,000 due to strong ETF flows and institutional interest.
Neil Howe delves into the fourth turning, a period marked by crisis and potential reforms. Peter Boockvar discusses the Federal Reserve's cautious rate cuts amid persistent inflation volatility.
Sven Henrich focuses on the small-cap stock rotation in a volatile market, suggesting near-term corrections with a focus on Federal Reserve signals.
Meanwhile, Jason Shapiro questions whether big tech innovation enriches many or just a few, and underscores the need for unbiased research.
Michael Silva's live trading strategies reveal how political events and Fed statements impact markets in real time.
Bob Elliott emphasizes the importance of income-driven over credit-driven economic expansions. We hope these insights help you make informed decisions. Stay tuned for more diverse perspectives and insightful analysis on market trends and economic policies.
Thanks for watching Financial Analysis in Review for July 15th, 2024. If you'd like more time-saving content, please remember to like and subscribe. If you have ideas for more channels you'd like to see summarized, drop a comment below. See you next time.